jobs are way up, unemployment is down, and so is the stock market. So why the heck, if jobs are up and everybody's getting these jobs, why is the stock market down? Why is crypto down? But crypto's not as much down. So that's what I want to get into, some strategies today. First off, the markets are down. The markets don't like people having jobs. I'll say it out loud. And the reason is because they want the government to start cutting rates. So when you cut rates, it puts more money into the markets. So puts out more liquidity. Let's say a business can borrow money at a lower rate. So these businesses, especially these small, medium cap companies, they rely on borrowing at a low interest rate, paying back, and using that to grow their business and create jobs and everything else. So they want, we can't have a strong labor market because that means the Fed won't cut rates. And this last rate cycle, they did cut in December, but the problem is they said they might slow down. Now there's not might slow down. There is, we're cutting it. We're cutting off the cutting. So there's no more interest rate cuts projected. Maybe at the end of the year, they're saying maybe summer. But regardless, now there's no rate cuts. So now the markets don't like that. So we're going to have inflation. Now they're all saying that we're not going to have a recession now because the labor market's so good, and that we don't have to worry about the inflation because now all these jobs. I think something's weird there. To be 100,000, over 100,000 jobs being created off, that they're off 100,000. There's something there's something weird going on there. But regardless, I try not to speculate. I just try to see the numbers and see what's going on in pretty much the macro world. And macro has been scaring me, and especially this. I'll be less political as I can. This new administration coming in, it's so volatile. You don't know what's going on. The markets don't like uncertainty. I don't know how much uncertain what's about to come in it can be. It's already affecting the market, and these tariffs that might come, obviously going to raise the prices. But now they're showing all this job growth. It's like, oh well, it doesn't matter as much, so the inflation's going to rise. So you've got this snowball effect, and then bond yields are going to rise. So people are going to want to take more money out of the stocks, put it in the bonds. So that takes the money out of the stocks, and the stock market's crashing. So this could happen in days, weeks, years. But there's definitely a pullback. But there's so much uncertainty right now, so it's tough for me to have anyone put anything in the market except for DCAing like VTI, Vanguard. So it's a technical ETF with all the good, the big names in it, not just the Marvelous Seven, the Amazing Seven, Magnificent Seven. So for me, I would just say keep DCAing into like something like VTI, and because you'll ride it down, but you'll ride it up. So like $100 a week in there is a good start. And then if it keeps going down and to the bottom, then you start actually $200 a week, something like that, which doesn't sound like the smartest thing, but that is literally the smartest thing to do. And that's your investment part. If you want to start trading, traders love volatility because that's where you make your money, either up, usually up as it's going up, but some traders like to short. And I do. I was planning on really getting out a little higher and then shorting a couple on the way down. So where we are right now, I've taken over the past couple weeks. I've been meticulously taking out some profits as we go. So I'm good. I'm like 40% cash in each of our accounts. So I got us a little safer going through this, but still kept us in the market. And now I have I got a lot of money to play with, and that's the smart thing to do, right? When there's blood on the streets, sell. I mean, buy. That is Warren Buffett's term. I'm sure I destroyed it. But there's my view right now is stay in the market and DCA, dollar cost average, in every week. Put in whatever you can afford into, let's say, VTI right now. That right there, I would say do that. Secondly, I would look at Bitcoin, because here's the thing with Bitcoin. If you look right now, it's hovering at 93, 94. It's been up and down. 103, 106 was the top, I believe, and then we went back down to 93 last week, and now we're still hovering at 93 after it went up to 103 a couple days ago. Bitcoin right now, it's pretty much stable even after all this stuff that's going on right now. So once the decoupling of Bitcoin with equities, they say that's when it's going to go to the moon or whatever. That doesn't make sense. It's an asset. So it's something that these big banks and equity markets can sell to you. So it's at a very low percent, under 1% of all the assets in the world, including real estate, bonds, stocks, gold. And in fact, gold is, I think, 7%. So even if Bitcoin rises to 2% of all assets traded, we're talking $500 to $1 million a coin. There's only 21, 27 coins. God, I should know this stuff more. I just know the basics. 21 to 27 million coins that'll ever be created. So you've got this deflationary currency. It's not inflationary. You can't keep you can't keep printing Bitcoin, and as all the fiat currency is being debased, all of them are, and especially the United States, which is this reserve currency. You can put it into Bitcoin and it'll maintain while everything else is going down. So you've got institutional investors now, ETFs. You got companies now putting it on their balance sheet. So to make there was a rule that went through at the end of last year that you can now count your Bitcoin as assets in your company. So that now your company assets have increased. Your balance sheet shows more money because you own Bitcoin. So when you have things like that, it always starts small, right? This is everything that happened with the retail people like you and me, just buying and selling Bitcoin, not even know what's going on, skeptical, bad actors, all that kind of stuff. And then it got accepted, and here we are now. ETFs, at the beginning of last year, you knew it was going to just increase Bitcoin, and you can almost predict it. So then now you've got it here. So the next step is now all these businesses put in their balance sheet, and then the countries putting on their balance sheet. Might as well, just in case. So now we're talking, say it's 2%, 3% of all assets in the world. You're holding on to 10x, 20x right now. But it's volatile. So I say put what you can lose in Bitcoin, but understand that it could go to $1 million a coin easy. And you don't have to buy a whole Bitcoin because you have to spend almost $100,000 on it. But you buy fractions of it because the return is huge. And actually, remember, even if it's sat still, the debasement of currency from inflation is destroying money anyway. So it's just putting it into something that's completely safe, or well, completely different. You can buy gold, and you should. I don't have gold. I should, and I might, and I still could. To me, Bitcoin and then some altcoins like Solana, obviously everyone knows that trades crypto. Then there's Ethereum. this should be Ethereum's time right now, by the way. When Bitcoin shot up, everyone's like, oh yeah, Ethereum's next because it's in that cycle. And so it has not yet. And I don't know if that's based on the global macro shit that's going on. Everything is in turmoil, yet you've still got this stability there, even though it's always been volatile. And then there's some other ones like SUI, SUI, that I bought into at least a year ago, just because I was building an NFT trading game with my art, and I wanted to do it different. And SUI has all this new architecture where they're like SFTs where you can make millions of one, and then it turns into an NFT only when someone uses it, blah, blah, blah. But really cool technology there. So that was why I bought into that. Now it shows utility and it's skyrocketed. But just being there at the right time, rather than just speculation, which a lot of these, like meme coins are fine. I'm not a big trader in meme coins because you have to follow them and you could ride that wave and think of it like a fun casino. But the bigger ones, the altcoins, and especially Bitcoin, are really something you should look into as a percentage of your portfolio. For sure. I mean, for sure. Especially Bitcoin. I mean, anyway, I think that's it for now. So it's been a crazy Friday. Who knew that the jobs numbers were going to be 100,000 off, at least 100,000 off in at more jobs. If it was 100,000 off in less jobs, then we'd be bad, even worse, because then it shows that we're going into a recession, stagflation. So stagflation could still happen. I don't think these job numbers are accurate. There's something about the job numbers either way, but it spooked the market. So when the market gets spooked, swoop. Oh, I should tag that. But anyway, you should probably put a little in right now when the market's spooked. We might crash another 20%, but you got to get used to that. You got to get used to being okay with fluctuations and volatility. So that's it. I hope this helps. I'll talk to you all again.